So hello guys, my name is Ahis, and um, today I want to talk about something that's very very important when it comes to investing, right? So there is the mindset that wealthy investors adopt that helps them build wealth um, for long term, right? So I call it the eight investment mindsets the very wealthy adopt that help them build long lasting wealth, right? So there's a major difference between rich people and people who are not rich is basically the way they think. The reason is basically the way they think about money, the way they think about work, the way they think about a lot of things that relates to life and wealth, right? Wealth, income, and all that is major. A major thing is basically a major shift in the mindset, right? So I'm going to be over the course of several videos. I'm going to be talking about this, so I don't make the videos too long. So I'm going to break it down one by one. So today is number one, and the topic for today is the risk. The rich think risk ahead of reward. Risk ahead of reward. Okay, so what is the point here? Now, it's said that Warren Buffett has a rule. Warren Buffett's number one rule of money. Number one rule of money. Number one rule of money by Warren Buffett. By Warren Buffett. Okay, so who is Warren Buffett, guys? Warren Buffett um, is the number one investor in the world. Is the richest investor in the world. He's not the richest man in the world, but he's the richest investor in the world, which means that he's the richest man who made monies from investments in the world. So if you want to learn about investments, you want to understand how to invest the right way, you want to listen to someone or whatever a man who created billions in investment has to say about investment. So why do we talk about investment? Before I get into this, why do we talk about investments? Now, investment is the only way for the average guy out there to become wealthy, right? You may not run a business. You may not run a business. You may have a job or something. It's not everybody who has the capacity to run a business. A business is usually a way to wealth, yes, when you are successful. But then most people would usually work at jobs or do small businesses or something. But the kind of business that make you wealthy is usually an organized business, not a mom and pop business, not a sole proprietorship where you are the only one running the show. That kind of business is just a job. It's another kind of job. Just that it is a job where nobody dictates to you. You're the one that controls your time. You're the one that controls your life. But basically, that is not the kind of business that can give you monumental wealth. That can give you the kind of wealth that will give you freedom and all that, right? Even when you're able to make a lot of money, you still lack freedom, right? So that's why we talk about investment. All around the world is said that investment is the only way to financial freedom for the majority of people. All right. So now that's the reason why we talk about investments, right? So we could get like we come back to this here where it says the number one rule of money by Warren Buffett. What's the number one rule of money by Warren Buffett? The number one rule of money by Warren Buffett is never lose money. Never lose money. Never lose money. Never lose money. In other words, that is, protect your money. Protect your money. Protect your money. So, guys, if you are going to be wealthy, you are going to have to protect your money. If we are going to be wealthy, you and I, if we are going to be wealthy, we are going to have to protect our money. If you put monies into things that are always losing the money, how are you going to get wealthy? If you cannot put money in something and then it grows by five, it grows by 20, maybe 100%, then you put it in another one, it grows 100%. If you do that for a couple of years and you don't lose that money, what happens is that you begin to build wealth. you begin to build wealth. But if you put that money in one thing and it makes some money, and then you put in another thing and the money is gone, how do you build wealth? Now you have to start from scratch again, right? So how many times do you have to start from scratch in order to be able to reach your goal? So this is the reason why the Warren Buffett's number one rule of money is protect your money. And guess what? He has a number two and a number three. And what's the number two rule of money? Number two rule of money by Warren Buffett is protect your money. The number three rule of money by Warren Buffett is protect your money. So as far as Warren Buffett is concerned, the most important rule of money is to protect your money. That's the number one rule. The number one rule of getting wealthy is protect your money. So if when we talk about that, I'm sure a couple of us have heard about that, but the question is, how does that really apply? Now you have all kinds of probably you are in the market and you're trading forex or you're trading cryptocurrency. I mean trading, not investing. There's a difference between trading and investing, right? There's a difference between training and investing. Trading and investing, they are different, right? So when you are trading, it doesn't necessarily mean you are investing. It could be investment. It could be done in a way that it operates like an investment, but trading is not necessarily investing. Absolutely not, right? So trading can be a normal job. It can be a sole proprietor job where you are just the one facing your screen and looking for trading opportunity. That is not investment. That is a job, right? So now when it comes to investment, what is investment? Investment is when you see a project or a business or a company that is doing very well, and you decide to, at the point after a proper analysis, you put your money in there and you go to sleep. You put your money in there and you go away from there. If you have to look at your chart every morning, or you have to look at what your money is doing, you are not investing. That's not investment. All right? That is another job. That's not investment. Investment, I can tell you something. The rich people who own majority stocks in the companies that they own do not even look at the stocks on a daily basis. It is people who are not there, who are trading, that are looking at the value and the price of the stock. The guy who owns the company and owns probably 80%, 70% holding in that company don't even go to check the stock price. They don't check the stock price, right? Because they are in for the long haul, and then that's not their goal. Their goal is not to be checking stock price every day. So that's the difference between a trader and an investor. So now when you are a trader, many times you discover right now that there's a lot of boom in the trading world. Even recently, cryptocurrency trading. Initially, it was forex trading and all that. Several years ago, it's been just forex trading. Then you have indices where you are trading NASDAQ, US 30, and so forth and so on. Now that cryptocurrency is hot, a lot of people go into trading cryptocurrencies. Okay, so but the issue is this: when you trade, it's good to trade, right? But if you learn how to trade properly. But the thing with trading is that the reason why the numbers, the statistics tell us that 95% plus of traders lose money, if it's because of certain things. Why would you have an industry where 95% of people lose money and don't make money and they are still there? Over that, actually, 95, 98% of people lose money, right? You see brokers put it on their website. They put those disclaimers there. They are not just disclaimers, they're actually real, right? So, but the issue is this: the difference between a guy who comes to the market to trade, to make a profit as though he's investing, and the other guy who doesn't do that, the difference is their mindset. The mindset. The investor has a long range vision. The investor has a long range vision. So the rich, when we say the rich think risk ahead of reward, that's what we're talking about. The investor has a long range vision. So first of all, he thinks of risk ahead of reward. But what do you find with most traders? A trader will fund his account $100 and over leverage it with the goal of making $100 on your $100 in a day. He plans to make 50%, 100%, 20, 30% on his money in a day, right? So, but he is not thinking, what if I enter this trade When he enters a trade, he's not thinking, what if I enter this trade and something goes wrong? He doesn't think that way. He only thinks, what if when I enter this trade, I plan to make money? When I enter this trade, I plan to make money. That's the only thing he's thinking. He doesn't ever cross his mind that what happens if I don't make money? What happens if this trade goes against me? So he over leverages on that trade without thinking of risk. So the mindset of an investor is the mindset of a wealthy investor is think of risk first. If you follow the rule of Warren Buffett's rule of money, you will realize that your goal, first of all, is not to even make returns. Your goal, first and foremost, is to protect your money, not to make returns. Returns becomes a secondary occurrence, a secondary consequence. Returns is a secondary consequence. Return is not the number one goal. The number one goal, according to Warren Buffett, and we have come to see that is right, is to protect your money. So if you enter a trade that has the possibility of losing you your entire capital, just because there's a return that you are going to get, and you are more focused on that return, that means you have broken the rule of protect your money. You have broken the number one rule of investing, which is protect your money. Okay, so this is the reason why people put their monies in Ponzi schemes. They tell you, oh, invest with us, we'll give you 15% at the end of the month, or we'll give you 30% at the end of every month, right? I was seeing a story a few days ago of how someone mobilized almost $1 million from people and put it in a forex scheme just about 2 months ago. He was promised 30%, 30% in the month, in the 30 days. He was promised by the investment, the forex trading company, or the quote unquote forex trading company, that he was going to get 30% at the end of the month. He already calculated. He went to people, called them, and raised money, almost $1 million, about $900,000 thereabout. He raised and he invested it. He was throwing monies into this scheme on a daily basis. Eventually, in the course of 30 days, it amounted to well over $900,000 thereabout. He never thought for one day what will happen if this money is gone. That's the hallmark of poor investors. They never think about risk. They never think, what will happen to my money? What if this money doesn't come back? They don't think that way. Now now those people he took money from are on his neck, and he's contemplating committing suicide. He's contemplating committing suicide, right? So think about that. How do you do that kind of thing without thinking of risk? Because that's what it is. So you are not going to, if you want to be a wealthy investor, the number one thing you must think about is protect your money. And when you want to protect your money, you cannot be going for quick gratification, instant gratification. In fact, these Ponzi schemes that you see everywhere, they cash in, they are banking on the fact that most people have instant gratification desire. You will see an investor, a wealthy investor, who will be building a refinery for several years. For example, I live in Lagos, Nigeria, and then the richest man in Nigeria is a man called Dangote. Dangote has been building a refinery that cost him about $14 billion. He's been building for close to 5 years now. That refinery has not made an oil refinery. That refinery has not made a dollar. He has invested billions in that project, and that project has not produced one drop of PMS. That refinery has not produced one drop of diesel. That refinery has not paid him $1, yet he's sinking billions into it. When that project launches this year or next year, Dangote will fold his arms, and the sales will be coming in, and the money will be coming in. He has already projected it, what that is going to be for him. That's how wealthy investors invest. We're talking billions of dollars there when it comes to Dangote, but basically that's not the point. The point is not billions. The point is the mindset. The mindset of investing in something and waiting. The mindset of investing in something and waiting. For example, look at cryptocurrency, for example. Investors, people who invest in cryptocurrency and hold it don't lose money. They research a proper coin, research a proper token, invest in it for a long term. They don't lose money. The ones that blow money and lose a lot of money are the ones who think they are smarter than the market, or they understand the support and resistance and all kinds of things. I believe that. I do that. I understand support and resistance too. But those who come into the market with a mindset of quick gains are the ones who lose big. Okay? They know where the coin is going to get to, up or down. Up or down. They know where it's going to go to. That's why they lose their money. They think, oh, I can come into the market today, I can make 5% on my money. But the other guy will buy the stock. Sometimes if the token, this token would drop. It could even drop 50%, 25%. But then in another lesson, I'm going to talk about how do you invest? How do you actually do the investment? Today we are just focusing on the risk ahead of reward. How do you, if you have $1,000, for example, and you want to invest it, how do you invest it? How do the rich people invest it? Do they place their $1,000 into one investment and hope for the best? Or do they have a way of apportioning that funds? We will talk about that in another class. But right now, the goal is you have to think, first of all, I've got to protect this money. It doesn't matter, because you will discover that the guy who has no respect for $50, when you give it to him to trade in the market, he comes into the market, he blows the $50 in a day. The same guy, give him $10,000, he will do exactly the same thing. So it's not about the size of the money. Okay, it's $50, I don't care. Give the same person $10,000, he will do exactly what he wanted to do, because he was thinking, I'm going to place one trade and I'm going to double my $50. When you give him $10,000, he will try to do the same thing. He won't say, oh no, let me just make 5%, let me just make 1%. No, he is going to try to double the 10,000 so he can make 10,000 on one trade. That's the same thing. It's a mindset. That's the mindset. And the mindset is something that we have to take care of and be sure that we get rid of this mindset. Because the truth is, why would you keep doing something that doesn't give you results? If you are a forex trader, for example, look at yourself, look at your money, look at for how long have you traded and how much have you made? So if you've not made money, why do you keep doing the same thing over and over again? Or if you lost more money than you've made, why do you keep doing the same thing over and over again? Why don't you ask yourself, what am I going to do differently? What is wrong with my trading? What is wrong with my approach? And what am I going to do differently? So the first thing is think risk ahead of reward. Think risk ahead of reward. Think risk ahead of reward. Take actions that protect your money first and foremost before you think about the rewards that can come on that money. The rewards is secondary. Even if you get no rewards, as long as you have your capital intact, you can always invest that money again. But if you don't have your capital intact and you lose that money, then you start from scratch all over again. So this is a major thing what I've found with rich people. They think risk ahead of reward. They think risk over reward. So basically, the way you do that is what Warren Buffett said: protect your money. So when you have $1,000, whatever amount of money, and you want to trade that money or you want to invest that money, your goal first and foremost is to make sure that money stays with you. Because if that money stays with you, if that money doesn't stay with you, then there is no prospect of a reward. There's no possibility of increasing the money. If the money is gone, there is no possibility of increasing the money. If you enter a business or a trade and you lose 80% of your money, are you now looking to make 80% of $1,000? Now, what is your goal? Is your goal now to make a certain percentage on your initial capital? Your goal now is to even recover the losses you have made. And it's going to lead to a lot of issues, right? So your goal now is to recover that money. You are not even going there now thinking I want to make a certain percentage, because you've lost a lot of money already. So this is what we need to think, right? Think risk ahead of reward. Real investors think risk ahead of reward. Okay, guys, this is something to think about. Look at it very well. Think about it. Look at what you have. Look at the results you're getting, and ask yourself, am I putting this to work? Am I putting this to work? Am I putting this to work? Okay, thank you so much, guys. I'll see you in another class where I'll discuss another one of the 8 investment mindset of the wealthy. All right, so have a good night and bye-bye.